All right, welcome back. This is episode 5. This is going to be liquidity secrets that the smart money institutions, big banks, they don't want you to know this shit, but I'm going to tell you. So, why would price come back to certain levels, right? We just went over a liquidity sweep, basic liquidity sweep, but I know you guys are asking, how the fuck do you know that this level is going to get swept, right? Well, this is why. Because this is what you're going to look for on a daily basis as far as sweeps. You're going to look at a few things, right? We're going to do, let's change this so you can actually see it. That'd be nice. All right, one, you're going to look at high time frame, and for future reference, this stands for high time frame, draws. What does that mean? Well, that is the 1 hour and the 4 hour. We're not going to overcomplicate this. That's all. You're not looking at the 3 hour, the 4 hour, or you're looking at the 4 hour. You're not looking at the 3 hour, you're not looking at the 5 hour, the 6 hour, the 7 hour, you're not looking at the 8 hour, you're not looking at the daily, you're not looking at any of that shit. 1 hour and 4 hour. Why? Because those are the high time frame draws that you're going to look for to be able to catch a trade during the time frame that we're going to trade. Because if you're looking at the daily, it might take you a fucking month to take a trade, and then it loses because it's a fucking monthly chart. So, high time frame draws. 1 hour and 4 hour. Second thing you're going to look for. Holy fuck. Hold on. Oh my god. Oh my god. All right. Second thing you're going to look for is session highs and lows. What sessions, you might ask? Well, Asia, London, previous New York, because we're going to be trading the New York session, which is 9:30 a.m. Eastern Time. You're going to look at the previous New York session. And then you're also going to look at, the third thing is going to be previous day highs and lows, which is basically the New York session previous day. So this and that is the same thing. We're going to just get rid of this and keep it like that, nice and simple, right? There's 3 things we're looking at. So simple. Hourly, 4 hour, highs and lows, high time frame draws, right? As draws on liquidity, where price is probably going to go. So let's look at this exact example that we were just looking at. What makes this work? Well, first let's identify what these sessions are. You have Asia session. What is it? It's 7 o'clock p.m. to 4 o'clock a.m. There is a 1 hour overlap. So some people say that it ends at 3 a.m. That is actually when London session, holy shit, I can't type. London session starts. London session starts at 3 o'clock in the morning until, let's put the a.m. for you people, a.m., and goes until 8 o'clock a.m. Why 8 o'clock? Actually, sorry, 8:30. Because 1 hour before London or New York session opens is pre-market. New York is 9:30. Holy shit. 9:30 to 5 p.m. This is a.m. But we have a pre-market that we actually pay attention to. Pre-market is 8:30 a.m. until 9:30 a.m. And then this is the real time that the market is open. Wall Street is open. That is what we're going to be paying attention to. All right, so now let's look at a example. Let's go randomly on the chart. Let's say right here. Let's replay this for this December. I don't think I'll get 1 minute data back here. Hold on. Uh, 9 a.m. Cool. All right. So right here, you'd open the chart and be like, all right, cool. So holy shit. It is 9 o'clock on the dot. And you're like, all right, let's mark out my chart. What levels are we looking at? So what you're going to do is take your tool. Your vertical line is the easiest way to do it. Mark out 7 p.m. Can you see that? Why can't you see it over here? Can you? Am I tripping? No, I'm tripping. Right. 7, and then you're going to mark out 4, right? Because you can see where to go. Where should you go? Why? Retarded? Oh, because we replayed. Okay. 7 to 4, right? So we're going to mark out different levels. We're going to say, okay, what are we looking at? And then until 8, that is the London session. We mark out highs and lows. So you're going to go through here. And you're going to say, okay, Asia session opened up here, move down and move up. That's the low. Why is it the low? Because that is the lowest point we went in Asia session. Where's the high? Technically here, right? But we didn't put a high in right there. That is the highest price went. But what makes a high? A move up and then a move down. So where would that be? Right here. We took out Asia session in pre-market or London session. Do we have a London low? No. Why? Because we don't have a move down and move up. Okay? So that's all we have. We have Asia low, Asia high. This high has been taken out. We don't care about it. Like, we'll keep it in mind, but we don't need to mark it out. Then what else do we have? Well, we have a 1 hour low here. We have a 1 hour low here. We have a 1 hour low here. What is this? A bunch of lows, all next to each other. Price might want to come out and take all those lows out, but we are in an uptrend. We have to pair everything together here. We are in an uptrend, so are we going to come down and take those out? We don't know. Nobody knows. Right here, we have a move up and a move down. That makes a high. Right now, it looks like we're probably going to take out that high. We're right there. Okay? And then on the 4 hour, go over here. What do we got? Well, basically the same levels. Some of these, that one's already marked out. That one's marked out. This one's marked out. We can mark this one out, but it's pretty high. But we'll mark it out. Okay? Go back down to the 1 hour. And now you have your levels marked out. What levels do we have marked out? 1 hour, 4 hour, highs and lows. High time frame draws and liquidity. Number 2, session highs and lows. We have Asia, and we don't have anything for London, so we're good there. What are we missing? Those who took notes. We are missing previous day highs and lows. How do you find those? Well, you just go hover across, and you'll find the start of New York session, which is right here. This is the high. So we did actually mark that out. That is the high of previous day market or New York session. And we have the low down here. So we did mark them out. Cool. But now we can check them off our checklist. We have marked out those levels. Now we are ready to trade for the day. We have our draws and liquidity, and we'll just go into the 5-minute. We're not getting into strategy or anything. Let's just see if anything even happened today. Like, these are all the levels in the 5-minute. Obviously, it's going to look a little bit different than the 1 hour. But let's just see what happens. Let's put this to the 1 times or 3 times speed. And let's just see. Okay. Look at that. We took this out. That is pre-market, so you wouldn't even traded that. That's fine. It is what it is. Then what did we do? We came down and we swept out this level, Asia low. And then we went straight back up, like absolute bull run after that. A whole 177 points That was a ripper. Okay? So that is how you identify where price is probably going to reverse. Look at that. 2 out of those areas are reversing off of. How do we know? How do we even refine this further? Okay? Let's go back to market open. Now that we know what's going to happen, let's just get that out of our head. Doesn't really matter. In market open, this is what you would see when you're sitting down, ready to trade. Market open comes along, you're like, all right, let's go. You're gonna be looking at all these lines you put out here. Maybe you're a dumbass, you even put lines up here, right? We don't give a shit about those lines. Why? Because how realistic is it that price from market open moves up 286 points? Probably pretty low. Is it likely that price moves down 89 points? Up 100%. Is it likely that price moves all the way down 142% or 142 points? It's relatively likely, but you have to know that NASDAQ and the S&P, they roughly move 1% per day. So if you ever open the chart and you're like, okay, well, since the move, we moved 1%. Let's say the price is already all the way down here from market open. Honestly, just fucking call it a day. Because price is way overextended and it's probably going to be choppy for the rest of the day. This is a prime example of where our highly interested draws are. We have all these lines, but which one are we probably going to go to? The closest one in the direction of the trend is low resistance liquidity is what it's called. Because we don't have to change the trend. We don't have to do any crazy stuff. We just have to come down, continue the structure that we're doing and sweep that out. This is what you're going to pay attention to when you mark out these levels. What is most likely going to happen? Not what do I want to happen, because nobody gives a shit what you want to happen. Because the market doesn't care. And quite frankly, you're sitting there by yourself in front of a screen. Nobody else cares. So if the market doesn't care, then fuck cares. This is very likely. And obviously, as we saw, it came down and did that. And let's just play for the rest of the day. You can see this? What happened after we hit our daily objectives, our daily liquidity levels? This level right here, our buy side and our sell side. What is buy side and sell side real quick? Buy side is when you have liquidity above you. Sell side, when you have liquidity below you. It's pretty simple. Back to this. What happens after we hit both of our daily objectives? We came back up, filled all that shit. These orders came up here, offloaded. Everyone's kind of done for the day. It is now 10:30. We had a little pullback here, and then that's it. This started consolidating. This is also lunch hour. But this is starting to do nothing. Now, if you see this during the day, odds are liquidity has already been swept. Just wait for the next day. Just log off, because nothing is going to happen. You can see we are just consolidating. Now, we can make some crazy moves, whether there's news, like I have no fucking clue what day this is. This is the 9th of January. But we are basically just consolidating. We're not doing much. You can see how tiny the candles are compared to these candles here. The random candle there, 6 p.m. That is actually pre-market for Asia. But nothing really going on after those two things happen as far as New York goes, because they are done. They made their money. They're fucking off the charts. Obviously, they don't trade their charts like this, but you get my point. That's what you're going to be looking for. But basically, you're going to compare, or you're going to take this with what we did before. What we did before is we said that price, right, back to that drawing. Remember that drawing where it was this? And I said that price has the potential to reverse once it comes above a certain level, but it's not a lock. Now, how can we put high probability on this level? This level right here is basically like dictating the entire trade. If that level wasn't there, we wouldn't even be looking at it as a trade because we're just in the middle of nowhere, right? Like if we were down here, would we be looking for a trade? No, because nothing happened. We didn't sweep any liquidity. Here, we swept that liquidity, came back up. This level right here, taking what we just learned about session highs and lows, hourly 4-hour draws, and previous day highs and lows, we can take that level. If that's one of these, if that's one of those that I just named, then it puts higher probability on this that we come down and respect bearish confluences in this example, since we're going to reverse and become a bearish trend. Respect bearish confluences and push lower. The same thing applies if we were going like this and we swept liquidity here and wanting to turn around, we would be respecting bullish confluences because right there is our liquidity level. And we came here and we would want to see some kind of retracement, pullback, and then continuation in the direction that we want to reverse. It is that simple. If you break it down, it's that simple. The confusing part is when you look at a candlestick chart and you're like, holy shit, it looks so simple when they just draw lines. It looks so goddamn simple. But then you come here and you're like, oh, hold on. This doesn't make sense anymore. But that exact thing happens all the time. You can see it right here. Came in, pushed down, we're doing this is a little gap here, don't worry about that. Pushing down, and then we came back up, we swept the liquidity, and then we pushed down. Same thing over here. We're just moving sideways, swept liquidity, push down. Okay, we have that on the opposite side as well. Just jumbling around. And we made a move up, swept down. We actually came down, swept back up to up here. This is probably, yeah, that's insane. Let's see, what else we got? We have this high here, came up, sweep, bam. So, hope you're taking notes, because that is basically the summary of liquidity, why we're looking at it, where we're looking at it, how to use it, and why different things work better than others. So, next video, we're going to start getting into confluences, because confluences is what makes or breaks this whole theory about liquidity. Because like I said, price has different levels that it can come up to, right? This level right here. And you don't know if it's going to reverse and go down or if it's just going to continue going up. The only thing that you can use to tell you that is confluences. What is a confluence? We're going to name 3. Break of structure, inverse fair value gap, and fair value gap. Those 3 things, along with sometimes equilibrium, is going to be what you're going to use to put this whole thing together. The next video, we're going to identify break of structure and how to use it. This is going to be the most used confluence that you'll ever use. So make sure you tune into that video. These are quick videos. These are easy. And as you can see, they're not Mr. Beast production style videos. These are very simple, but they're packed with value. And it's also real. Some people come in here and script it. They spend hours going through the chart, looking for their little setup. And they're like, oh yeah, this is perfect. Yeah, let's do this one. This one did that. Yeah, cool. Okay. So let's go to the next video. See you there.